Welcome to the Inspire to Invest podcast, where we're sharing stories from real estate investors and how investing has changed their lives. This episode of the Inspire to Invest podcast has been brought to you by Vantage Point Financial. Hey everybody, welcome to the Inspire to Invest podcast. I have Alex Tam here for today, and he is an extremely dedicated individual, and he has a very diverse journey encompassing roles as a chiropractic doctor, a clinical director, entrepreneur, and of course, real estate investor. He's got over 15 years of experience, and he's not only helped patients overlooked by mainstream medicine, he's also authored a book called The Truth About Chronic Pain. So I think that's something that I found really interesting. Despite his passion for his work, the demanding hours took a toll on his family time, and through real estate investment and delegation, he realized there is a way to prioritize what truly matters. And now he helps fellow entrepreneurs, doctors, and small business owners do the same so that they can achieve business growth and create long-term family wealth, and most importantly, have that time with the family members that matter so much. So thank you so much, Alex, for being with me today. How are you?
Doing great, Serena. Thank you so much for having me on.
So you obviously have a career in medicine, and then you segued over into real estate investing. How exactly did that come about? Because obviously that may not be super mainstream for most people in your field.
Yeah, that's a great question. Being in medicine, I had my own clinic since 2009, and I wanted to better the business, right? So ultimately, I went to a business conference. It was a 10X conference with Grant Cardone back in 2018.
Yeah.
At that conference, he really talked about the power of real estate and syndications. I looked at everything, talked to some of the real estate people that were attending the conference, and decided, you know what? I just need to dive in. So made my first limited partner investment there, have done multiple ones since, and here we are today, about 6 years later, helping others out to do the same thing.
Yeah. And I think that once you see the power it has to change your life, it's contagious. Like, it's hard not to talk to people about it because you've been able to reap the benefits for yourself, right?
Oh, it's been huge, right? I had a single family and it didn't do as well as I thought it was going to.
Yeah.
But multifamily has worked well for us. And as other doctors started asking me what I'm doing, I felt obligated to really become educated. And that happened in 2021. That's what led me to actively investing, right?
Yeah.
Joint ventures, doing GP, KPs.
Yeah.
And that's how we end up where we are.
Now, can you take a step back a little bit? You talked about your first limited partner investment. Can you talk about how you found that opportunity and then how that led into what those other opportunities look like?
Absolutely. So when I was at the conference, I thought syndication was a word that Grant made up. I didn't know what it was. I was like, did he make this up?
Yeah.
And that opportunity came about during the conference. Right?
Yeah.
He pitched it to a lot of potential real estate investors. I gave my wife a call. I said, hey, I think this is what we should be doing. She's like, what are we talking about?
Yeah.
She had no idea what it was, but felt like, I've done my research that it was a great idea.
Yeah.
And we invested. And since then, I found other podcasts, bigger pockets, right?
Yeah.
And started looking into other companies, and then other deals came about as well.
Yeah.
I didn't know that there were people doing it individually, like the 506B way, where it was the friends and families.
Yeah.
I just knew about the 506Cs for years.
Yeah.
So that's how I got into it.
Now, for the deals that you've done, are they primarily equity investments? Are they private lending? Like, what do those deals look like and how are they structured?
They're structured in that 80-20, 70-30, limited partner, general partnership, and you do get equity in the deal.
And that's 70-30 in favor of the active partner?
Limited partner. The limited partners.
Okay.
The limited partner is where the 70 or the 80% is.
That's favorable. So, I feel like most of the things I see here are more like 50-50, 60-40. So
yeah. More of the recent ones that we've done, because money is even harder to come by nowadays.
Yeah.
We've seen structures of the 80-20s now.
Yeah.
So, yeah.
And where are most of those opportunities taking place? Like, are you limited to the area where you live, or are you investing across the country?
Well, I live in Lake Tahoe, Nevada. So there's no deals here,
Okay.
right? So we mainly invest with partners in other parts of the states.
Yeah.
Texas, we've got some in Ohio, Indiana, Omaha, Nebraska, right?
Yeah.
Some in Florida as well.
Yeah.
So I love staying in the South, in the Midwest.
Yeah.
So that's where our primarily markets are.
Yeah. And of those properties, what do those typically look like in terms of the size of the investments?
We've got some JVs that are, 8 to 17 units.
Okay.
We've got some syndications that are in the 200 to 300 units.
Yeah.
So it really depends. Once you get above, say, 60 to 100 units, it's much easier to take down a deal when
Yeah.
you are doing syndication,
Yeah.
right? You don't have to come in with as much cash. You can
Yeah.
diversify a little bit. But the smaller ones, say 40 and below, there's
Yeah.
more likely that you can joint venture, come in with a few partners to do
Yeah.
those.
And would you prefer to come in with a few partners or do you prefer to JV one to one?
I get asked that uh, question quite a bit. And the syndications versus the JVs, there's two ways to look at it. For me, putting my own money in the JV, the pros and cons. The pros is you get to do it with a smaller group.
Yeah.
Right? There isn't a quarterly newsletter you have to write. There's not as many investors that you have to, deal with overall, right?
Yeah.
But in a syndication where you have 20, 30, 40 people involved, you really get to bring other people on board as well.
Yeah.
Those who normally would have never gotten the opportunity,
Yeah.
they get to come on board. So I really like that. And that's why I got active in the first place, right? If I wanted to stay passive, I'll be doing JVs all day. But as being in service, whether it's medicine or in real estate, I feel like getting other people involved, making sure they understand the opportunities.
Yeah.
That's very fulfilling for me.
Yeah. So obviously you started out for those first few years more in that limited capacity. So then how did you make that jump over to being active? And then for being active, like, can you talk about what kinds of opportunities they are? Like, are you looking at adding appreciation and value to properties or just buying them turnkey? Like, what does that look like?
Yeah, there's a combination. When you buy a property, being more active now, I'm more active in the asset management side, the capital raising side, right? You can go in and take down a property that may be in a little bit of distressed, right? Where you have to turn it. Each unit may need as little as 3,000 to 4,000. But if you're doing a gut job, it could be 15 to 20,000, right, per unit, and adding value that way.
Yeah.
Those are investors usually, they understand that there isn't going to be very much cash flow at the beginning during the stabilization period. Yeah. And, that was good about a year or two ago. Now the transition is less in the value add, especially the big value adds. Yeah. And it's more in properties that have stabilized, where we go in and do smaller renovations, maybe countertops, cabinets, right? A few $1,000s, and then really get everything up to market rent. And we focus more now on the operations. Some of our partnerships have vertically integrated their property management. And I've realized over time that, wow, having in-house property management, I mean, it is key.
World of difference. Yeah.
Big difference. Big difference.
Yeah. Now, for the size of your portfolio, where does that stand today?
Right now that we own our partnerships in sits about 250 units. Yeah. That we're in.
And how do you find balancing that just in terms of everything across the board? Like, did you find that you had to get business coaching? Because obviously that's a next level, right? When you start to acquire that many properties and you're balancing the books with that many properties.
Before I became active, that's where I got some coaching. And we still consistently get consulting through our mastermind. So we joined the Jake and Gino group in 2021. Yeah. And then rolled into MIH Mastermind soon after, right? Yeah. I believe that being part of a community, that the mindset, the people, the values, the mission, vision is we're all going after the same thing. I think that's very, very important. Real estate is definitely not a single sport. It is a team sport. I
Well, and
realize
that's
that.
just it because you're often working independently, right? So it can be very isolating. If you do have questions or you need support, like who do you ask if you're flying solo, right? So I think that's where those
Right.
communities and those masterminds make the world of difference. When
Absolutely.
you look now at, this past 6 years, what would you say is your greatest success in your mind?
I would say the greatest success, I mean, I believe getting started was a big success, right? And then choosing the right mentorship and being in the right mastermind
Yeah,
and the relationships. I got into this game thinking it was all about the numbers and
yeah,
finances,
yeah,
not realizing soon after it's all about the relationships.
yeah,
Yes, the numbers have to make sense. Don't get me wrong,
yeah.
right? But the relationships that you've built comes first. And we've had a lot of success in building very strong bonds, very strong relationships
Yeah.
down the line.
Yeah, no, that makes sense. And I think as you continue to build and grow, that will be even more and more important, right? Because people will keep
Absolutely.
reinvesting with you if they trust you and they believe in what you're doing and they feel like you're dependable with their money and stuff like that. In terms of
100%.
obstacles, you obviously talked about, just the challenge or the fear that a lot of people have just getting started. Is there anything aside from that that you would have looked back at as like your biggest obstacle?
I would say the biggest obstacle is have gotten into deals where we may not have done full vetting
Hmm.
on the main sponsor,
Yeah,
and finances did not end up really the right way. It was not clear.
yeah,
I wish that we would have dug a little deeper on the
yeah,
main sponsor, the operators themselves,
yeah,
before diving into these deals. And
yeah,
luckily, we got out of these deals, good. We actually made some money, which is
yeah,
surprising. But nowadays, that's something that I'm very, very strong about,
yeah,
is making sure we do a deep dive on the sponsors,
yeah,
looking at their past history, looking at what they do, who they work with.
yeah.
And that's really important. Now, more important than ever, because we're getting other investors involved as well. It's
Yeah.
not just my money now.
Yeah. Now, what kind of things are you asking them? Obviously, there's the finances, but is there anything when you compare, how you used to do your due diligence to what you're doing now? Like, what other things have you maybe added to that equation?
Really look at what their past deals look like, but also at the same time, knowing how they are justifying their underwriting as
Okay.
well. Understanding underwriting is a key part in what we do,
Hmm.
right? Because operators come out and they say, oh, we can achieve this, this, and this, and this.
Yeah.
And if something doesn't check out, we need to know how to verify those numbers,
Yeah.
right?
Yeah.
They say they have the team. Well, who's on your team? What is the track record on those team people, the people on their team?
Yeah.
We talk to past investors, people who I trust, who have invested with them.
Yeah.
How does the deal coming out, right?
Yeah.
So all of these things, and that's the thing, is that most limited partners don't understand the underwriting fully. So
Hmm.
they're really relying on us to say, hey, here's a deal. I'm investing in it, right?
Yeah.
You're Feel free to take a look at it. And they're
Yeah.
trusting in me to
Yeah.
really look at the underwriting
Yeah.
and verify all the numbers. And
Yeah.
that's where we're at right now.
Yeah, I think that makes perfect sense because I think anyone can put together a really fancy, glossy presentation and all the details, but
Oh, yeah.
obviously there's got to be ways to fact check all of that and do it properly, whether it's with an accountant or a lawyer, right?
Right.
But agreed, like I think there are even deals that looking back, 6, 7 years ago, things that I did. And as an example, like I invested in some syndicated mortgages and they were all supposed to be shorter terms, like 12, 18, and 24 months. And I'm still stuck in one and a half of them, like 5.5 years later. It's
Oh,
like,
my gosh.
just like never ending deal. And they're still paying their interest on the front end, but it's just this moving target. And I think looking back, there was just, there was a lot of misrepresentation behind what the deal actually was. The contract did say they could extend for 6 months twice. Obviously, we're well past that. And it just feels
Mhm.
like we've all kind of been stuck in this situation in limbo. And, for me, a lot of the other investments I've done paid that off a long time ago. But you can imagine nobody knew COVID was coming. So there could
Right.
be people that really were depending on this principal investment coming back at that time. And now they're, years later, right? So I can see where that would be challenging. So I think you can never ask too many questions. Sometimes there's things that are obviously presented one way, but you've got to really look at for yourself no matter what you're investing in.
Yeah. And you got to be able to stress test these ideas, right?
Yeah.
And see, hey, what would happen? What's the worst case scenario? How are they prepared for it?
Yeah.
Right.
Yeah. Yeah. No, absolutely. Now, looking at your wealth of experience, what would you say are some of the biggest lessons that you've learned?
The biggest lesson that I've learned is the importance of a phenomenal property manager,
Yeah.
right? The
Yeah.
exciting part in getting deals is usually finding a deal, financing the deal, and getting under contract and closing
Yeah.
it.
Then you got to do the work.
Then it's the work. No one really talks about that from the beginning
Yeah.
on the importance. Like, who do we have a good property manager lined up
Yeah.
for this?
Yeah.
What is their track record now?
Yeah.
That is huge. We overlooked
Yeah.
it at the beginning and had to switch multiple times in property management.
Yeah.
But now, when we get into deals, that is one of the biggest things that I'll be asking. It's like, who's the property manager? Who is
Yeah.
managing it to making sure that the business plan is going
Yeah.
to be executed?
Yeah. And also just figuring out like when the unexpected happens, like there's a company that I invested with and their property manager actually collected the rent in September and then just like kept it and didn't send it
Mm,
along. And it sounds as if they did the same thing in October. And obviously like then they intervened and got legal involved and stuff like that. But they had to make very, very quick changes. Obviously, like that's hundreds and hundreds of thousands of dollars because that's, I think, 250 units or something.
yeah.
And they had to bring in a new property manager, found a lot of the work was not completed or behind, a lot of vacancies, the missing rent money. So they've obviously been on like serious damage control right now. And I think they're definitely doing their hardest work to try to make everything happen. But at the end of the day, that property manager that's the feet on the ground for you makes the world of difference, especially when you're dealing with investors and stuff like that, right? You've got mortgages to pay, you've got utilities. So it couldn't be more important.
Huge. Yes, correct.
So on that note, we're just going to take a really brief break for a word from our sponsors and we'll be right back.
It's Megan Becker, wealth coach and real estate investor from Victoria, BC. I've spent a decade helping business owners and real estate investors safeguard and supercharge their wealth. Today, I want to share some golden nuggets for real estate investors. Tip 1, diversify. In this ever-changing market, having a mix of assets is key. Tip 2, leverage the power of infinite banking. It's not just a tool, it's a game changer. Whether you're a seasoned pro or just diving into the real estate, let's connect. Visit vantagepointfinancial.ca or follow us on Instagram at Megan Becker.
Inspired to Invest is proud to support the Beyond Success program. In today's complex world, it's absolutely crucial for our youth to learn how to take charge of their financial future. We believe that every young person deserves access to accurate, practical financial information. Designed to bridge the gap, the Beyond Success program leverages a comprehensive educational bootcamp to equip young minds with essential financial literacy skills. At Beyond Success, it's not just about teaching financial literacy, it's also about fostering a foundation for a prosperous and empowered future. Join us. Together we can build a brighter financial future for the next generations. Join us. Together we can build a brighter financial future for the next generations. I value transparency, integrity, and trust. If you choose to work with me, you can be assured that business will be conducted honestly and openly. Time is of the essence in this industry, so you can expect nothing short of quick, clear communication from me. I'll keep you informed every step of the way so you feel comfortable throughout this entire process. Our homes are where we eat, sleep, relax, and play. My clients' best interests are at the heart of everything I do. And with this said, my service to you doesn't end when the transaction does. As your realtor, I'll not only help you buy and sell your property, I'll also educate and support you along the way. I want to help you fulfill your goal of home ownership and become your trusted real estate resource for life. I can't wait to share my passion for real estate with you. More importantly, find you the perfect house to turn into your home. Looking to buy, sell, or invest in Durham Region or Toronto? Let's chat. Hey, everybody. Welcome back to the Inspired to Invest podcast. I have Alex Tam here with me today, and he has an illustrious experience in the medical field. But along the way, he discovered real estate investing, and he's now been investing for the past 6 years. So he's shining a light on all of his different experiences from going from a more passive investor to more active investing. And with that being said, I guess one of the questions I want to ask you is, what's the craziest thing that's happened to you so far as a real estate investor?
Well, there's multiple things, but one of the craziest things that's ever happened is, for me, there's realizing that real estate can be done by anyone. But here's the crazy thing. Just because we're excited about real estate does not mean other people are going to be excited about real estate as well.
Yeah.
We can be so excited as investors, and we believe, oh my God, it's the best thing out there.
Yeah.
Right. And then when you share it with people, and so many people are not ready. They're not ready to hear it. You have the facts. You want them to do well, especially friends and family.
Yeah.
The crazy thing is they think it's maybe
Crazy.
a scam.
Yeah.
They think you're crazy.
Yeah.
Because it is so outside of the norm.
Yeah.
Right. And then we realize, wow, how small the community is.
Yeah.
You start going to conferences, you start seeing the same people all the time.
All the time. Yeah. And it's not that it's so much that it's outside of the norm. I think it's the way that we've been raised and the way that school teaches you that you get educated, you get a job, you buy a house, you have your retirement plan. Like, we're all kind of programmed in these certain ways, right? And I think you're just, even the books that you read, like, no one talks about money and finance and investing. Like, I think they should have like Rich Dad Poor Dad in like all the high schools. Like, I think people need to understand, like, if you want to get ahead and if you want to hedge inflation and if you want to grow your worth, like, this is one of the best tools that you could possibly take advantage of. And it is accessible to anyone, right? So I think it's just
accessible.
Reprogramming everything that we've been brought up to believe.
It is a huge reprogramming, right? Everyone is told to work until they're 65, 70. Well, who told us that?
Yeah.
Right? The schools taught us that. The government taught us that.
Yeah.
Well, there's obviously people who retired early.
Yeah.
How did they do it?
Yeah.
Yeah, they're living life like, wow, are they just lazy? Right? We start thinking all the negative things.
Yeah.
Well, they're just lazy. They don't even work all day.
Yeah.
Right? We just didn't see all the work that they put in, the strategies that they put in order to get to where they are.
Exactly. Yeah.
Yeah.
Because people are too busy out there buying a fancy car, clothes, and
that's it.
They're just not prioritizing the assets ahead of those purchases.
They're trying to keep up with everybody else.
Yeah.
Right. I'm trying to get my passive income to buy me all that stuff.
Exactly.
I'm not trying to use active income to do it.
Yeah.
Right.
Yeah.
And that financial independence, it's achievable.
Yeah.
Where your passive income can cover your expenses. I had no idea that was something that was doable.
Yeah.
Until we were able to do it. So it's been great.
Yeah, no, that's amazing. Now, you obviously talked a lot about education and your mastermind early on into the chat. What would you say is some of the best advice that you've gotten over the last few years?
One of the best advice I've gotten is don't get rushed into a deal.
Yeah.
No deal's better than a bad deal. Right? And I got that drilled into my head. Don't just go out there looking for the shiny object syndrome.
Yeah.
And just, oh, there's a deal. You better go after it.
Yeah.
You got to verify that it's a good deal.
Yeah.
Right. I think being taught patience has been key for us.
Yeah.
Is getting into relationships with the right people.
Yeah.
Right. Learning how to buy right, finance it correctly, and then manage it correctly.
Mm-hmm.
That's the rules that we stay with. Mm-hmm.
Yeah, it's a slow game. And I think that there is a lot of comparison and competition in the sense that, even if you're on social media, people put the number of doors that they have. And, it's just like this, it may not even be cash flowing. They could even be cash flow negative, but they could be like, I have 1,000 doors or whatever it is, right?
I had no idea how they calculated that when I first came in. People told me they have 3,000 doors. And I said, 3,000 doors? So here I am thinking, all right, if they got 3,000 doors, let's just say each door cash flows $100 a month, right? Why are they still working? Right?
Yeah.
I had no idea they put in their limited partner positions and They got like 0.003%. And then all of a sudden they got 300 doors.
I was talking to someone that said they even count the number of doors within a property, like the bathroom doors, the closet doors.
Oh my God.
Because I was talking to someone, he's like, they don't have that many doors. And then they said that, and I'm like, I've never heard of that before, but I guess if someone's desperate to appear a certain way, maybe they would. But obviously, I think at the end of the day, you've got to do what makes sense. The cash flow is important, especially now, like with rising interest rates. Like if you went into something that was, barely making any money, then where are you when the interest rates go up?
Yes.
Right? So
I like to look at, hey, what's your passive income per month? What does that look like?
Yeah.
Right? Screw the doors.
Yeah.
Right? What's the finances look like?
Yeah.
But people like to boast about what they have. Yeah. And it's that rat race, keeping up with the Joneses type thing. Yeah. Oh, I got 5,000 doors. I'm like, yeah. So why are you still working so hard?
Yeah. No, I know
what's
that
the deal?
Perfect sense. And that's kind of a perfect segue into my next question, just in terms of financial freedom. Do you have a particular number in mind? And it doesn't necessarily have to be number of doors, but you talked about passive income, or whether that means retiring from medical. Like, to you, what does that look like to know that you're financially free?
That's a great question, Serena. And I don't have a set number. Right now, real estate has surpassed what our monthly expenses are coming in already. So say if I didn't work another day, we'll be set, right? And then the question is, I love what I do as a doctor.
Yeah.
Now we've put together a team of 2 doctors and 5 staff in this office. And my goal is to go open a second office. Mm-hmm. Because I feel like what we do here is too important to keep it to one location. Mm-hmm. Real estate's going to continue to come. We're going to continue to build it. Yeah. And it's going to continue to maximize itself. Yeah. As that happens, our lifestyles probably change a little bit. Yeah. Right. And there is no set number, because I don't plan on stopping. Yeah. I plan on continuing to do what I really enjoy and what I really love to do. Yeah. And continue to add years to my life, less stress, more function, more happiness, and more fulfillment.
Yeah, no, that makes perfect sense. So you've talked about it a little bit, but in terms of how real estate has changed your life, and that could be in terms of time, freedom, opportunities. You talked about, the passive income exceeding your expenses, but just as a whole, up until this point, like, how has that really impacted you?
Oh my gosh, the impact on our lives has been huge. Not only the freedom of finances and time, right? And I'm more willing to take time off of work now. Yeah. Yeah. If I have to go somewhere, right? Take a day, take a week, take 3 weeks. I'll go. Yeah. Whereas before, you're like, oh, I don't know if I can do that. Yeah. Right. Yeah, but now, I know what you mean. Yeah. Now you can absolutely do it. And the amount of, it's just the stress. Stress is the number one cause of diseases. Yeah. And inflammation in the body. And just having less stress and less inflammation and less diseases alone is huge. And the relationships that we've made. And another thing that's changed is I've been to more remote places in America than I've ever thought of being before. Yeah. I never thought I'd end up in Omaha one day. Yeah. But we had to visit the multifamily that we were going to purchase. Yeah. Yeah. And it's not always sexy and beautiful in the way that you may think, but that could be where the opportunities are. The numbers make sense. So I think people just need to be open-minded. And if you don't live in an area like where you live, where I live, like, there's not great opportunities right now because the value of the real estate is just so high. And I don't know about landlord tenant rules. Like, for us, that's challenging here. So for me, like, everything I've ever invested in is outside of my own backyard. And, you want to go far for different reasons, but sometimes that could be another barrier some people have. So you just have to keep that mind open, and the opportunities can come in. Absolutely. 100%. So I guess in terms of your favorite quotes, obviously the name of this podcast is Inspire to Invest. So what would you say is one of your favorite quotes that motivates and inspires you? I have it right above my desk. It says, success is your duty, obligation, and responsibility. Whether it's to your staff in the office, to your family, right? The word responsibility is really important. People think, well, I could just relax and provide, but it is our responsibility to provide a phenomenal life to the family that we have.
Yeah.
And take part in it, whether it's depending on the role, right?
Mm-hmm.
I know my wife, I wouldn't be able to do what I do without her doing what she does.
Yeah.
And we're both responsible.
Yeah.
Yeah.
Yeah. But I think that's what makes a great partnership, right?
Absolutely.
So thank you for, again, your time today. For anyone that does want to get in touch with you and learn more about your opportunities, what's the best way for them to get in touch?
They can contact me on all the social media networks, LinkedIn, Facebook, Instagram. They can give me a call,
Okay.
and we can provide that in here. Email me.
Great.
Either way, we'll be in touch.
Great. And we'll obviously include all of your details in the show notes below. For anyone that is watching, thank you so much for your time tuning in to Inspire to Invest. And if you like what you've seen, make sure that you like, comment, and subscribe. You can also follow along at Inspire to Invest podcast on social media. And make sure that you remember, when you invest in yourself, the sky's the limit. Thanks again. Thank you to Vantage Point Financial for bringing you this episode of Inspired to Invest. The views represented on this podcast are for general information only and does not constitute investment or other professional advice or an offering of securities. The host and guests featured on Inspired to Invest make no representations as to the performance of any particular investment. Should you decide to make an investment, you are responsible for conducting your own review and analysis. It is recommended that you obtain independent legal, accounting, and tax advice from licensed professionals.